Hello and welcome to the Bitcoin Mining Farm Infrastructure Fundamentals. With this course, you will get the fundamental knowledge of Bitcoin mining farm infrastructure. You will also know the considerations and requirements in building a Bitcoin mining farm. Lastly, you will also learn how to track metrics and make sure that your mining farm is in its most optimized state. This course is for people who wanted to own a Bitcoin mining farm, as well as people who are going to be consultants for their Bitcoin mining farm clients. This course is also for people who want to scale up their Bitcoin mining farm operation. So now let us go over the course outline for this course. We will start off with the foundation section and begin with the Bitcoin Mining 101 video. We will then move on in talking about the mining hardware basics and end this section with mining rigs and your income. After the foundation section, we are going to move on into the heart of this course, the various design considerations. So in this section, I'm going to first touch base on what kind of requirements do you need at the start of the project, what kind of things are you going to be expecting. Then we're going to look at the site in itself through the location and building requirements. And then we are going to look inside the building into looking at the facility space. Then we're going to move on to perhaps two of the most important requirements that you will be seeing when you are building your own Bitcoin mining farm facility, which is the power requirement and the cooling requirements. Next, based on the power requirement and the cooling requirement, we are going to look at how are we going to do the cabling for your Bitcoin mining farm. Lastly, we are going to touch base on the topic about security in this section. We are then going to end this course with our last section, which is reliability and metrics. In this section, we are going to look at how can we optimally organize the mining farm facility such as that it could be ready for growth. We will then look at the redundancy and availability for your mining farm so that you can actually keep it online as long as possible. Because the more times that is online and mining coins for you, the more profitable your business will be. Lastly, we are going to look at the documentation and the monitoring schemes that you should have for your Bitcoin mining farm so that you can keep track of your mining farm status and ensure that your business is performing the best that it can be. As you know, Bitcoin mining is probably one of the most profitable business or operation that you can have right now. It's like alchemy, where you can actually generate your own money. And this money keeps on growing, as you can see in the Bitcoin market right now. And in this course, I'm not teaching you how to trade Bitcoins. I'm not teaching you just the fundamental of Bitcoins. What I'm teaching you is how you can build your own mining farm and scaling it up to the moon so that you can actually get millions of dollars in revenue each year. And I'm also teaching you on how can you maintain your business and how can you actually keep on growing your farm so that your profit can keep on raking in. I hope that you're going to be excited about this course. I know I am. Thank you, and I'll see you in the next video. So first of all, thank you for taking interest in this course. As you know, you can make your own Bitcoin. Unlike fiat currencies such as the euro or the dollar, you can mine Bitcoins even at home whereas you can't print money or go and mine gold or silver. By default, each node that is generating Bitcoins is a part of the Bitcoin ecosystem that is focused on peer-to-peer networking. Now, you might think it is good and all that we can start mining Bitcoins, but how tough really is it to mine Bitcoins? It is actually not that complicated. A mining machine can be created by someone with any experience of using a computer and with just a tiny little research on the internet. In fact, that is what I'm here for, to bring you from a novice to building a state-of-the-art Bitcoin mining farm. Now, this course is focused on the hardware and infrastructure needed to build a state-of-the-art Bitcoin mining farm. But since I mentioned that this course is targeted for people at all levels, even for people who completely are not aware of what Bitcoin is, I would like to take the opportunity to do a brief introduction on Bitcoin mining in our Bitcoin Mining 101 video. So let's start off with our first question. What is Bitcoin? Without a central bank or single administrator, Bitcoin is a decentralized digital currency that can be sent from user to user on the peer-to-peer network without intervention from any intermediaries. Transactions are checked by cryptography by network nodes and registered in public distributed ledger. This ledger is also known as what we call the blockchain. In a blockchain, each block contains a hash of the previous block up to the chain's genesis block. The blockchain is managed by a network of interacting nodes that are running a Bitcoin software. Each transaction are broadcast to this network using this software. The network nodes will verify each transaction, add them to the ledger copy, and then broadcast it to other nodes, where each one of them stores its own copy of the blockchain. A new set of approved transactions called a block is generated at differing time intervals, averaging every 10 minutes, and published it to all nodes without needing central supervision. Bitcoins are registered to addresses within the blockchain. This is nothing more than just creating a random private key and computing the corresponding Bitcoin address. People, or hackers in particular, cannot reverse engineer this Bitcoin address to get the private key. This address is also known as what we call the public key. The owner must know the corresponding private key in order to be able to do anything with their Bitcoins and digitally sign the transaction. The Bitcoin network would not accept any other proof of possession if the private key is misplaced, which makes the Bitcoins rendered unusable and effectively lost. As such, the private key must be kept secret. If the private key is leaked, it may be exploited by the third party to seize the associated Bitcoins. Due to the popularity of the Bitcoin currency, many currencies, goods, and resources can be traded with Bitcoin. Now, it is helpful to grasp what Bitcoin mining actually means before you start mining Bitcoin. Bitcoin mining is legal and is done in order to verify Bitcoin transactions and provide the necessary protections for the Bitcoin ledger by running SHA-256 double round hash verification procedures. The Bitcoin network compensates Bitcoin miners for their computation efforts with giving Bitcoins to them. This comes in the form of both newly released Bitcoins and the processing fees from processing transactions. The more resources you devote to computation, the higher your share of the award. The things that you need for Bitcoin mining can be split into two categories, which is the software and the hardware or the infrastructure. Now, the hardware and infrastructure portion will be the heart of this course, as I will delve deep into getting the optimal hardware and infrastructure to build a high caliber Bitcoin mining farm. However, let us look at the software portion in this video. The Bitcoin mining software is of course essential to your Bitcoin mining operation. The software is very much dependent on the hardware as well as the operating system that you use. Now, the most popular Bitcoin mining software might change over time. So what I'm going to tell you right now is going to be what's popular at the time of this recording. In this case, it will be the CG miner, the BFG miner, and the Easy miner. Now, the CG miner is a command line mining application, and this software allows the user to configure a lot of things such as overclocking, remote interface, the fan speed on your device, etc. The BFG miner, on the other hand, is another command line software that is similar to CG miner, but with more cross-platform options. Heck, it even supports installation in Raspberry Pis. But, I actually don't know why you would do that besides having fun with it. One downside for this particular one is that it doesn't actually support the GPU mining support. Lastly, for the Easy miner, unlike the above two, this particular miner software is actually a GUI based. So it is actually a lot more user-friendly and actually a lot more graphically appealing. After all, it's better to look at an interface than just look at command line, right? Of course, GUI uses computation power, so you won't be seeing it being as efficient than the command line based ones. Now, aside from the mining software, another software that you would need is the Bitcoin wallet. Bitcoin wallets make sending and receiving Bitcoins simpler and grant the recipient control of the Bitcoin balance. The wallet for Bitcoin comes in several forms in both software and hardware format. A trader must create a Bitcoin wallet to trade in Bitcoins, as the wallet holds relevant information such as the protected private key used to enter Bitcoin addresses and carry out the transfers. The most secure format is actually the hardware wallet, where the information is stored in a secured USB device that is then plugged into the USB port of whatever your device for mining Bitcoins or collecting or using Bitcoin will be. Now, the least secured option for Bitcoin wallets, on the other hand, is the web wallets, where it is actually stored in some unknown website. It is important to keep your Bitcoin wallet secure, as Bitcoin wallets are targets for hackers. Some protections that can be adopted include encrypting it with a strong password in the wallet or selecting offline saving option, like what I mentioned earlier, use a secure format like the hardware wallet. It is also advised that your desktop and mobile wallets be backed up periodically, as issues with the wallet program on your computer or mobile device may render your Bitcoin holding useless. I understand that many people might only want to just get right in without wanting to make it big with a Bitcoin mining farm. If that is the case, this course may not be for you, as the subsequent lectures are all about building the state-of-the-art infrastructure to maximize the earnings in a mining farm. If you just want to get started, there are two easy methods with low investment needed. Of course, this also means that you will have low returns as well. The two things that I want to introduce to you are the Bitcoin mining pool and cloud mining. Bitcoin mining pools is essentially a group of people with their mining hardware grouped together to solve a block. The thing is, if you wanted to start small without much investment, you may mine for years wasting electricity without earning a single Bitcoin. With Bitcoin mining pools, you share the mining work with a group or pool of people. This means that you're all pooling resources together to mine Bitcoins. Of course, you will also share the rewards as well, so the reward will be split between the miners plus the operation cost of the mining pool itself. Common Bitcoin mining pool includes the P2 pool and the Bitminter, but of course there are many others as well. For those of you that don't even want to own any mining hardware, I recommend you to check out something called cloud mining. In fact, a very good business model of which it applies to the contents of this course is to build a cloud mining facility. This means instead of mining your own coins, people are renting out your facility to mine theirs. Cloud mining is a process that utilizes least cloud computing resources to mine a cryptocurrency, such as a Bitcoin, without needing to operate the hardware and associated applications directly. Cloud mining companies encourage individuals to open an account and partake in the cryptocurrency mining process remotely for a basic fee, making mining available to a larger range of individuals around the globe. Because this type of mining is performed through the cloud, problems such as equipment repairs or direct energy costs are therefore minimized. In relation to the amount of hashing power rented, each participant receives a pro rata share of the income from the mining. The most common method of cloud mining is actually called the hosted mining. The client purchases or rents mining machinery installed in the miner's facility in this model. The miner is responsible for the repair and functioning of the machinery. Customers have full influence of their cryptocurrency through this model, whether it is you're mining Bitcoin or Ethereum, etc. A mining farm's economies of scale mean that expensive mining related costs such as power and storage become manageable. But this method of mining is associated with a substantial upfront expense, as the renters will need to pay a monthly rental fee for the mining. And as a business, mining companies charge a cost to make sure that they will be sustainable as well as earning a profit at the same time. With the subsequent videos of this course, I will teach you the things you need to get a mining facility going, whether or not it is for your own or your client's Bitcoin mining, or what we call the Bitcoin mining farm, or build it for cloud mining businesses. Are you ready for making it big in the cryptocurrency world? I know I am, so let's get started. In this video, I am going to talk about the mining hardware that you would need for your Bitcoin mining farm. For the mining hardware, I will look at it in two categories: the GPU miners and the ASIC miners. I have to say, you will only need ASIC miners, as the GPU miners are probably now obsolete. Regardless of which, I will still go over both types. Let's get started. Let us start with the GPU miners. As the name implies, the focus of these rigs are the GPUs, or the graphical processing unit. As you would probably know already, they're always the next best thing that comes up for essentially all computer hardware. So it is basically a moot point telling you what to get, as what I tell you today may be useless for tomorrow. Instead, I'm going to tell you in general what you need as a general rule to build the best GPU mining rig for the facility. When choosing the components for your rig, the most important parameter is the thermal design power. This is also known as the TDP, which is essentially the max heat generated by the component in typical operations. So let us look at each of these components individually. Let us start with the CPU. In the GPU miner, the CPU is not actually really important. So don't go crazy in getting the latest model, as the most important is to get the best output with the least cost. You should instead pick the one that has the lowest thermal design power as possible, so it will consume the least power as possible for the rig. As motherboard, one thing to keep in mind is that you should pick the motherboard first before you pick the CPU, as that is a much more important component for the miner rig. Whereas what motherboard you use dictates the CPU type and RAM that can be supported, the main interest here is actually the number of available PCI Express slots that it has. Typically, we want to expect one with 4 to 6 PCI Express slots available, but of course, the more the better. Note that even a PCI Express X1 slot would have enough bandwidth for what we need. As for the RAM, I would say 8 gigs usually would be okay for the GPU miner rigs, and the RAM speed doesn't really matter for our application. And of course, the most important part of the GPU rig is the GPU, or the graphical processing unit. The mining hardware that you will use utilizes 100% of GPU power. So the most optimized or lower thermal design power GPU should be chosen. This means that it would in turn lower the energy consumed and generate less heat. Note, I said optimized, not the lowest, as we need to look at a much more important factor here, which is the performance. With that in mind, I want to introduce you to another parameter, which is the flops, which is a measurement of the GPU's computing performance. With that, along with the TDP, we can calculate what is called the performance per watt, which is flops per TDP. The higher the result, the higher its efficiency. Other things to keep in mind when sourcing the GPU is that it should have more than 3 gigs of RAM, an open air design, and you should actually also keep having all the same GPUs within the rig, so that all of the GPUs within this particular rig should have the same model and the same type. So basically, I would recommend you to purchase all of the same GPUs at once. Another thing that I would like to recommend is to get GPUs with the back plate, as not only it provides extra protection, but also have better heat dissipation as well. Now, next thing we want to talk about is the power supply. The most important part for the power supply is its output power, as you're going to power several high-power GPUs. I would recommend to spec the power supply by assigning 200 watts to each GPU that you have in your rig. As for the cooling fans, one thing that you should be familiar with is what we call the CFM, which is the cubic feet of airflow per minute measurement. This is an indicator on how much air the fan could move. For the mining rig, you should look at airflow fans that have a high CFM. Allow 150 to 200 CFM allocated to each GPU in your rig when speccing these fans. Lastly, let's talk about the chassis. There are 2 types of chassis available, which is the closed air and the open air. The closed air chassis is the one like your normal desktop computer, whereas the open air chassis is the special one where basically it is actually not an enclosure, so because everything is actually open. What makes it the lack of protection will also allow better airflow. With the GPU mining rigs, the open chassis is often the recommended option. What truly matters when it comes to cryptocurrency mining is that the cryptocurrency you mine is worth more than what you invest in machinery and energy. Since cryptocurrency mining can be pricey, these margins can be closer than you may expect. It can be pricey to purchase hardware up front, and some of it can cost thousands of dollars a year to operate on energy. Having more energy efficient rigs is enormously critical when selecting mining hardware, and that is where ASIC mining rigs come in. They differ from a GPU rig, which depends on components designed to perform more than just one operation. Instead, from the ground up, ASIC miners are programmed to perform the calculations needed by a particular cryptographic hash algorithm used by the cryptocurrency in question. They're extremely fast, powerful, providing a high hash rate and energy efficient because of this single focus, consuming much lesser power than a GPU miner rig with 8 GPUs that do for the same job. This combination of reliability and low power consumption makes them much more affordable to use than hardware for more general purposes. In fact, ASIC miners are actually the only way to go as the Bitcoin block algorithms have gotten so complex and intensive for the GPU miners to do. These can usually do billions of hash rates per second, with the top of the line ones going to the trillions. What is even better is that ASIC miners often have closed air chassis, so it has an enclosure, unlike the GPU rigs. Now, you might ask, Mike, why are you then teaching me all about the GPU rigs? Now, the thing is, though, things change over time. So there's a lot of unknown factors within the future of Bitcoin mining. So in the future, you might have the capability of building your ASIC mining rigs. And in an essence, even though that ASIC miners are pretty much focused on doing one job, which is mining Bitcoins, it is still pretty much a computer at heart. But for me, I would even put Raspberry Pis as just a semi-computer, even though that, as many of you know, it's basically not. However, the components are relatively the same. So by knowing what the inside of a GPU miner rig is, what are the components inside, and what it should be looked out for, can actually help you in understanding how these rigs work and allow you to maybe future-proof your business. And when the opportunity comes up, when they allow you to build these from scratch, it actually would give you a better knowledge in how to build a top-of-the-line miner rig for your operation. Let us now look at the generated heat from these rigs and how it affects the lifespan on their components. Conductors such as gold, silver, copper, and semiconductors such as silicon, germanium, and selenium are the materials that form the electrical components of every computer hardware, or in this case, every rig hardware. These materials' physical and chemical properties change as the temperature changes. For example, with an increase in temperature from 20 degrees Celsius to 100 degrees Celsius, the internal electrical resistance of copper rises by around 20%. And not just copper, materials expand as the temperature rises in general. These expansion may create electrical interference that is unwelcome, and the components may not function as they're supposed to. Consequently, if it is not built to tolerate such a rise in temperature, an increase in temperature will make components as well as the entire system to be in an unstable state. To solve this, you can either engineer the system to work at higher temperature or by cooling the modules back to the desired working temperature. Of course, the former is the better solution, but it is also a more costlier solution. The capacitors are the most common electronic components that are used in computers, or in this case, mining rigs. However, the parts used in these systems are also extremely vulnerable to heat. Constituents of the capacitors begin to alter their chemical and physical properties and deform when they're exposed to above the designed operating temperatures, and thus the capacitors that are within your computer or your mining rigs will start to break down. On the product specs, the design operating temperatures are usually mentioned. For example, the operating temperature of ordinary aluminum electrolytic capacitors is around plus 85 degrees Celsius, with the new solid capacitors commonly used in computer that can be operated to more than 100 degrees Celsius. But of course, this high temperature of operation can only last for a short time, as the lifespan of less than 2/3 of a year can only be sustained if you are operating at this temperature consistently. So what happens in the context of the real world? Why do some desktop computers, despite not having a good cooling solution, last so long? Well, the thing is, most normal usage of computers or electronic devices, they are actually not running all the time. they may only run at most a few hours a day. Another thing is that, for example, computers usually utilize cooling solutions that keep it cool even under heavy workload conditions, so that the temperature rarely exceeds 90 degrees Celsius. The cooling heat sinks and fans are designed to maintain a suitable working temperature. And further to that, the electronic components within a computer have protection mechanisms such as they shut down to prevent being affected when the temperature reaches the specification threshold. Now, going back, why is heat such a concern for mining rigs then? Why are we talking about heat? Well, for one thing, these rigs operate at 100% of the GPU's capacity for 24/7. And these rigs need to run continuously for a long time. And of course, mining rigs in general are very costly. Also, because most mining rigs are run remotely, so that means that system reliability is actually much more critical than for a standard desktop computer. After all, if you need to drive hours and hours to your mining farm just to actually replace or restart a mining rig, you would need them to be more reliable. What this means is that the heat is a concern in mining rigs because heat in general shortens the life of the mining rigs, and they also create instability to the rigs as well. As such, you would want them to have less heat or at least not be affected by heat as much as possible. The optimum safe operating temperature for a GPU is around 80 degrees Celsius, as stated earlier. And above 80 degrees Celsius, the GPU will render unstable and typically throttles down. Furthermore, the life of the components above this temperature would actually be lessened as well. And you might think that this applies only to GPU mining rigs, but this actually also applies to ASIC miners as well. So you should actually be cognizant about the heat that is going to be generated in your mining facility. And of course, we are going to talk more about heat and explore the cooling schemes that you will need to implement further down in this course. In this video, probably actually one of the most important video, or at least the most interesting for you to learn. And this video is focusing on mining rigs and your income. So I'm going to actually talk about the various aspects of mining rigs that can actually lead to an effect on your income. And I'm also going to go over a high-level calculation and high-level example on how you can calculate your overall profit from Bitcoin mining. So let's get started. For Bitcoin mining operations, there are many variables that affect your earnings. And they are the ones that you can see right now in front of you. The first one is the system's average hash rate. Hash is a cryptographic feature that takes an entry and returns an alphanumeric string of a fixed size in what we call the hash value. Now, the second variable is the network's difficulty. This is, in very general terms, the amount of effort needed to mine a new block. This depends on the network's overall hash rate. Remember, the more miners there are, the higher the network difficulty. The third variable is the price of a Bitcoin. A higher Bitcoin price is contributing to increased profits. And lastly, the last variable is the overall electrical power cost. And in this case, the general rule is the cheaper the electricity would lead to higher the profit. With regards to cost and requirements of the miner, the following 5 factors need to be taken into the account, which is the cumulative cost of a mining system, The depreciation and loss of value of the system in the long term, for example, over an expected life cycle of the mining rig, the physical space needed for a mining rig and its associated costs, the maintenance requirements of the rig, as well as the cost of a disruption to the mining process. Where the cumulative cost of the rig itself is pretty explanatory, let us go to look at a depreciation. Electronic devices, such as that of computers, usually suffer from a loss of value for two reasons. One being the natural mechanism of a depreciation, and two, the reality that newer models are continuously being made available. In particular with number two, much consideration needs to be made as you know the network difficulty will continue to increase, which means that the return that you get from your mining rig will diminish over time. So you need to consider whether or not you need to keep using it or buy another, newer, shinier rig. You might think that you can sell your rig to get a nice salvage value out of it. But the thing is that it is not as rosy as it sounds. If you have an ASIC rig, if you don't want it, not many people do as well, since it means that it is an outdated version, which means that it is inefficient. Therefore, it is useless. Couple the fact that it is actually used, which means that it has significant wear and tear due to 24/7 operations. For GPU rig, it actually still have the wear and tear problem, but you can actually reuse it to repurpose it for other functions. So it may actually have more salvage value than the ASIC rigs. So now let us look at the space requirements. The two main consideration factors for space requirements are noise and heat. Mining rigs are loud, especially if you're running an entire plantation of it. But if you're running a mining farm with which it is an isolated facility where you just remote in, you shouldn't need to worry about it much. As these rigs operate 24/7 non-stop, they also generate a lot of heat as well. There may be a way to use this warm exhaust air from multiple mining rigs within a farm. Maybe, for example, to heat up a boiler. But recycling the hot air that requires a lot of preparation, which makes the whole operation even more complex and costly, and often many times more than the actual expense of the whole mining system or the mining farm itself. So the easy and functional approach is to just route the warm air out with simple air channels or ducts. We will look into this topic much later in this course. For maintenance, this is more or less applying to the facility in general. As the rigs usually have short lifetime, not much maintenance actually needs to be done besides routine inspections to make sure that there are not signs of incoming failures. As for disruptions, the cost will very much be an estimated cost as to the probability of disruption happens and the cost of getting it back online. This may also have an opportunity cost associated with it, but it is at the discretion for the estimator in this case when calculating the impending profit margins. All right, so let us go over a high-level income calculation. So let's say we bought an ASIC rig for $5,000 with a hash rate of 110 trillion hash per second. This rig consumes 2,000 watts at a cost of 10 cents kilowatt hour. We're not going to calculate this by hand since there are one too many online calculators out there that are tied to the Bitcoin difficulty chart and the current Bitcoin market price. So it is a moot point to calculate all of this information by hand. So there are a lot of these Bitcoin calculators available online, but in here I'm going to use the website which is shown in front of you, buybitcoinworldwide.com/mining/hardware. You can actually use any one you want. I just use this for myself. If we actually plug in the numbers that I've provided you as the example, you would actually see that there are a lot of details that they produce, which is, let's say, the profit per day, the amount that's mined per day, the electricity cost that's being used per day. So in here, overall, when you look at per year, let's just say, you would actually have around the profit of $12,180.25 of profit per year for this particular mining rig. And that's basically just a forecast based on the difficulty that we have with the current blockchain, as well as the current projection of the Bitcoin price. So, of course, I'm saying that I'm going over a simple calculation. So I'm not just going to tell you to plug everything into an online calculator and the online calculator would do the rest. Heck, the rest of these calculations, you probably couldn't find an online calculator to do it. So let's continue on with what we have based on the profit per year that we calculated through our online calculator. From the example, you know that your rig costs $5,000. So now, let's say the perceived lifetime is 3 years for this rig before you need to replace a new one. And since it is an ASIC rig, I will assume a $0 salvage value. Now, if we do that, the math for straight line depreciation is basically your initial cost minus your initial your salvage value divided by the lifetime in years. So in this case, since the salvage value is $0, it would just be 5,000 divided by 3. So your yearly depreciation will be $1,666.67 per year. So let's just assign this particular value to your profit. I would actually just say that instead of looking at it as a depreciation, I would just look at it as a per year usage of that rig based on its lifetime. So it's the usage cost of your rig per year based on that your rig can only last for 3 years. So when you do that, you know that your profit from your online calculator is calculated as 12,180.25. You just minus the 166.67 from it, which equates to $10,513.58. So that would be your yearly overall profit minus the cost when you assign your yearly usage cost of that rig to your profit. Now, let's say we're running a mining farm operation with 1,000 of these mining rigs. Well, if that is the case, the yearly profit will be equal to $10,513.58 times $1,000. Well, that equates to $10,513,580. Now, that might be a lot of money, but we have actually not accounted for the place that we're going to store all of your mining rigs for your operation. So we haven't accounted for the facility yet. Hypothetically speaking, let's say we need a 3,000 square feet building to be built, and the quote in a remote location is $1,000 per square feet. This means that you will actually need $3 million to start. Now, if we need to borrow from the bank these $3 million at 3% in 10 years, then we need to use the loan payment formula, which is P equals to R times PV divided by 1 minus 1 plus R to the power of minus N, where PV is present value, R is the rate per period, and N is the number of periods. Let's say that there are yearly payments. So for 10 years, so n will be 10. Plugging into the formula, we will then have P equals to 0.03 times $3 million divided by 1 minus 1 plus 0.03 to the power of minus 10. And that equals to $351,692. So we need to get the payment to be deducted from your earnings. So that will be what it's left, which is 105,13580 minus the 351,692. This equates to what you get as $10 million, $161,888. Now, let's say that your maintenance and operating costs would net around 50 grand per month, which includes utilities other than electricity, maintenance, security, etc. Your overall cost would actually be around, well, your leftover yearly revenue would actually be around, with the formula, 105,13580 minus 351,692, which is equal to $10,161,888. And there you go. This is the high-level rough estimation as to the income that you get when running a Bitcoin mining farm.